Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we got an interesting week ahead of us. So, hold on. It's a little... seems a little bit low. Turn the volume up there a bit. So we are in the blackout period for the Federal Reserve this week, so we're not going to get any Fed speakers. We get the Federal Reserve next week, but at the same time, a lot of the passive flows are all turning very, very positive. So there tends to be more allocation in the later half of January than at any other time of the year. We're also out of the blackout period for a lot of stocks, and so we're in a situation where the market could turn bullish. Of course, if it doesn't, then it's going to be a doozy. All right, but so it's kind of weird that we come to this key inflection point before the Federal Reserve. All right, so we need to be on our toes. It's going to be interesting to see how this all plays out. Coming over to the charts, let's just see what they did here over the weekend. So you can see on Friday in the S&P 500, it was actually quite a positive day. There was some real panic bid into the close, and now here today they are trying to extend it in the overnight session. Okay, now part of that might be China. Just remember, like this day right here was dismal. Okay, that day I really put the recession scenario on the, before that I was kind of like, yeah, it's we're okay, it's fine. When that one happened, I was kind of like, maybe there really is a recession, which is interesting because all of the analysts have kind of switched to like, hey, maybe actually the soft landing is going to happen. I don't know, we'll see. Okay, treasuries have kind of just been sell. Things are looking up, and so I guess you have to continue to be a vigilant hawkish. We're at 3.5 right now in the 10-year. And I still kind of feel like 3.5 is a little bit too low, but at least if the stock market is going to turn super bullish and like reach, past these recent highs, 3.5 is too low. Okay, coming back over to oil, we're getting a little bit of a run this morning. Natural gas continues to just be down, but hey, that's good. That's part of why everything is kind of working out right now. Gold and silver coming off of their recent highs, some profit taking over there, but still looking really good. Copper looking okay. This chart just looks great. Every time I look at copper, I mean, reminds me a lot of 2021, where it was just like copper just kept going and going and going. And then we're coming over here to the dollar. Well, they had a little bit of a fall at the beginning of the weekend. We're now at 102, but not too big of a drop. And the bitcoins, oh man, there was some real upside movement the week before. The Bitcoin community is getting really excited. There is still risk out there though, and apparently the current what do we call it, FUD that is out and about in the cryptocurrency market is that some of the major banks in the cryptocurrency system are going to lose access to Swift and other things. So there could still be some headwinds in Bitcoin, and I would not read that strong move up as start of a new cycle, time to buy in necessarily. We've been at a fair valuation for a long time, but probably need to write a cryptocurrency note. I haven't done one this year yet, but we'll get to that. So with all that said, we are getting some activity in the treasuries, aren't we? I don't really have any 6:30 news or anything like that. We do have 6-month and 3-month bill auctions later today. But like, look, there's some serious volume coming through here in the treasuries early. That is quite the move. It's about 10,000 contracts. And the 30-year pushing. I would have liked 3.5. Well, I feel like I'm a little bit too late on this one to try and get involved. Let's see here. Mohammed El Arian. The inflation dynamics themselves are not very encouraging. Says inflation has moved from the goods sector to the services sector, which is much harder to contain. Says Mohammed. Okay. Joseph Wang. The Fed has suggested changes to its quantitative tightening framework that would allow quantitative tightening to continue for 3 years. It now views RRP and reserves as fungible and is open to quantitative tightening during rate cuts. This post reviews the shift and suggests it is an effort to steepen the curve. Steeper curve would be nice. I'm down with that. I'm down with that. You know, would help my bank stocks. Of course, if my bank stocks would help themselves, I may have to, I don't know. I don't know, man. I don't know what to do with them. I still like the company, but it was this consumer banking kerfuffle at Goldman is not very encouraging. Look at them offers. Look at them offers, man. It is not just so I think we may be approaching an area right here that is likely to become a liquidity hole, but the offers are coming out, man. Like, I was looking at 3.52 and thinking 3.52 is too high, and look, they're almost already to 3.53. Let's see here. How many people did we ban overnight? 1, 2. This must be like some sort of like there must be some sort of like a mill, like somewhere in India or something, where they're like, okay, here are all of these Discord servers that are good to go to, and yada yada yada, you know, because I get like 2 every day, and they keep you know, like for a while they were getting around it, but I was able to change the rules. And so now it catches them all, and they didn't shift tactics again. Okay, so they did bounce there. So that might have been the liquidity hole, further shove, come back to the liquidity hole. I don't know. But the yield's not coming back as much. Would like it to go back to 3.5, but you know, whatever. Robin Brooks, markets are definitely buying into the China is back theme. We're tracking the strongest inflow into China since 2020. That's coming at the expense of the rest of emerging markets as investors increase their allocations to China and cut their allocations everywhere else. Is being retweeted by Live Squawk. Top story on Reuters: Goldman Sachs asset management arm will significantly reduce the $59 billion of alternative investments that weighed on the bank's earnings. Which ones are these specifically? I would expect to see meaningful decline from current levels. It's not going to be zero because we will continue to invest in and alongside funds as opposed to individual deals on the balance sheet. Let's hear it says alternative assets can include private equity or real estate. That would maybe make more sense. Did they maybe get stuck with some of the real estate? Mm-hmm. You know what has really surprised me about the real estate thing was that I knew that when interest rates were coming up and everything that it was really going to hurt the real estate industry, right? I really severely underestimated how long and persistent that dynamic was going to be. You know? Like I thought, oh, okay, the real estate market came down, it's kind of fine. No, it's just been like free fall for like a year now. Like it just doesn't let up, you know? My gosh. President Biden tweeted a video from Saturday Night Live, I think it was. Yeah, and the woman there is like doing their front monologue, and because of the way that video on Twitter does, it's like it's just zoomed in on her cleavage, and I just have that stuck in front of me on Twitter. Oh, I guess he made a slight appearance of sorts. It's actually a good joke. Anyways, that's what we got going this morning. Treasury market appears to be in free fall. One of the most aggressive moves coming right out of the gate that I've ever... You know what? This move in the treasury market is really unusual. Yeah. Fun. Here, wait, I'll show you what I'm talking about. See, look at this. That's what I got on my Twitter feed. Thanks, Joe. We appreciate it, actually. We really do. Anyways, I can't remember the last time I've seen a flow come out this strongly in the treasury market with no clear catalyst right out of the gate. You know what I mean? Joe sniffing his screen. You know what? Joe Biden really tries to play the social media game that Obama did. But it just doesn't work as well. Because number one, it was too quick. Oh, wait, I come back. Because number one, he's just not as good at it. Or at least his interns are just not as good at it. And they don't have as good of material to work with. But also, I feel like it's already... old and tired. Oh, the price action. Oh, I gotcha. Anyways, I feel like that people are kind of over it. Like, I don't think that virtue signaling gets you the same kind of like kudos on social media that it used to, because people aren't using Facebook as much, and that was kind of... You know, I mean, because I remember doing that like early on. It was like, oh, okay, if something happened, I should say something, because that's an opportunity for me to say something that will get picked up in the algorithm that will keep my audience engaged. At that time, it was my audience was my Facebook audience, because we, you know, a lot of those people were like ravers. And so we wanted to be up in the feed so that when we put out a song or whatever the deal was, they would see it. But it didn't really work out that way, because Facebook crippled themselves and they started limiting everybody's engagement. But I feel like that Facebook was a big part of how that virtue signaling dynamic came about. And if you are the politician, it still makes sense to do that sort of stuff. But I feel like that people have kind of become so used to it now that they kind of expect you to do it, and it doesn't really get you anywhere. The better a person is online, the worse they are. I don't know if that's strictly true. There certainly is. I think that the larger issue here on that front is that social media is really effective for a narcissist, right? Like every time that I look at this issue, for some reason it keeps coming back to that, because I've never really dealt with. I guess I have. I think that some of the people that have tried attacking our channel were narcissists. I had met one girl during my single life that I would say was mildly narcissistic personality disorder. Although more than anything, she was severely ADHD. Good grief. But it was never something that I personally suffered from, because I'm like, why do I keep coming back to this? Well, if you're a victim, one of the things that I've found victims do is they come back to narcissism at the center, all the time. They just kept coming back to it, right? But no, I do see this thing in social media where it's really advantageous for narcissists, right? And it's not just that it's advantageous for narcissists. It's the system wants you to be narcissistic. It's they're actively encouraging everybody to try and be narcissistic, So you're going to see that the most prominent examples of people out there, people that become really successful. Why are they successful on social media? Because they're very narcissistic. And so yeah, you're going to get a lot of instances of people where you find out that they're quite terrible in real life, despite their virtual signaling, right? But I think that the world, almost all normal people were kind of virtue signaling to some extent too. Crappy person is a crappy person. Maybe they don't know me, they whatever, right? Well, no, it's if you want to understand. Yeah, because if you really the more you can understand the fringes of people, which would be people that are narcissistic, people that are neurodivergent, people that are this, that, and the other sort of a thing, it makes it easier to understand regular people and use that to your advantage to some sort. See, so the neurodivergent thing, the thing that I find really curious about neurodivergency, and don't get me wrong, there's some problems there. Okay, here again, it's social media is encouraging people now to be neurodivergent, because it's another one of those virtue signaling sort of a things. It's oh, well, okay, being a minority isn't as cool anymore. What about if you're neurodivergent? Because, people with autism, and I don't know how they qualified in this study that somebody was autistic, but only 30% of autistic people are in the workforce, right? So being autistic is a bigger disadvantage than any minority in the United States, right? So it's very quickly become a discriminated against class that you can virtue signal with on social media, which I find incredibly, being ADHD, like the idea that ADHD is something that one should, people should be taking pity on you and you hold yourself out on. I don't want people, we'll talk about it to help other ADHD people, or where it can help people understand people in general. But I find it incredibly offensive, this idea that it's they need your pity sort of a thing, because that's the exact, especially with ADHD people, that's the exact opposite of approach that you should take with them. If you ever end up being a manager and you have an employee that's ADHD, or whatever the situation is, you're working with somebody that's ADHD, you should hold them to a higher standard more frequently is really the best way to deal with an ADHD person. and because they lack that self-regulation. So if you become the person that comes in and helps them regulate themselves, that's the most beneficial thing to them. So it's not that you want to give them more leeway, it's you want to give them less, right? But I digress. When you get into autism in particular, you start to realize how much power dynamics drive social interactions, that like a lot of the conversation that people have, you know, like the words that they're saying don't really matter. People care primarily about the tone, like especially small talk. It's like it doesn't really matter what you're talking about necessarily. It's more about how you're saying it. Like, is the way that you're saying it entertaining? Like that's the game, is can we talk about something that is entirely mundane and boring and say it in the most entertaining way possible? Like that's the game, right? Man, I can't believe that this is already moving down again. And now we're at 3.54 and I've just sat here. Right. And one of the things that we see happen is that among normal people is that we have some of these systems in our brain that are so vigilant that we'll see things when they're not really there. Like you'll see a face in the clouds when they're not really there because your brain is wired to see faces, right? Well, one of the things that will happen is people will see perceived a change in social status when they're not really there. They're overly vigilant about you know, especially teenagers do this, right? They're hyper vigilant about what does everybody's looking at me, what do they care about me, what is my social status, right? When the reality is most of the time nobody's paying attention to them, nobody cares, right? And something that happens with autistic people a lot is that people will perceive that autistic person is trying to topple them in the social hierarchy in some way, when the autistic person is just trying to be factual or whatever the deal is, right? So when you go into those things, like that's really interesting. That's where I'm saying it's like when you start looking at the people on the fringe and sort of their behaviors, but then also the challenges that they deal with when dealing with, you know, your regular average person, it really helps you understand a lot about human nature in general, right? The demand for high neurodivergence is higher than the supply, I guess. I mean, the whole thing, Uzi, is that hold up. I think that ECB, somebody from the ECB is speaking. Visco. Okay, it looks like this is kind of bouncing back a little bit. I'm still a little bit nervous about taking this, even though there's very clearly a strong meta order short here today. I mean the whole thing is no, I don't think it's that at all. I think that the whole thing is people are realizing that ADHD and autism is far more common in the population than people realize. That's point number one. ADHD and autism are far more common in the population than people realize, and there are a lot of people that are kind of only mildly autistic, mildly ADHD, and have been floating under the radar all this time. Like we always thought of autism as like the Rain Man kind of guy, right? Like in the movie Rain Man, because that is a guy that literally he cannot function in the world without the assistance of other people. He cannot take care of himself, right? In Rain Man, okay? And so that was always our picture of somebody with autism. But the reality is that there are a lot of people that are very functionally autistic, because autism is really like, because of either neurochemical deficiencies in the brain or other genetic issues, and there can be many different causes. This is like straight up different brain structure, right? So like ADHD is like the neurotransmitters in the brain are not at the same levels as other people, right? Autism is like, because of that, the brain structures are literally different, right? So there's all of these people that have these different brain structures that were flying under the radar, right? And what we find is that the outcomes for this group of people are not very good, right? And not only that, it's not only just that the outcomes for them are not very good, but the outcomes for them are not in line with their abilities, right? So we get these people that are like very autistic, and they can be very, very intelligent and or very, very effective at things. Like even if you get to somebody that's very autistic, right? They can still do work, they can still do jobs, and they can still be very, very effective at them. But they tend not to get hired, they tend not to make very much, they etc., right? So what's actually happening? Regular people don't like them. Like it's just, that's just straight up is all there is to it, is that we have biases that we can detect the neurodivergency and we immediately don't like them. Like that's straight up all it is. And so people with ADHD and autism are underperforming what they should. So it's a serious issue. It's a very serious issue. One that's worthy of discussion and like societal interest, because the reality here is that this is a bigger problem than many of the other kinds of forms of bias that we see in society that we make a big deal out of, right? I think the next big one is going to be short. If you're a short guy, man, life's not so hot, even though there's really no justification for how you get treated, right? So I think it's worth discussing. But what I hate is the take that it comes onto on social media, where it's like all of a sudden everybody's ADHD and autistic, and so it leads to this impression that like it's being overdiagnosed, which is not true, that they're very underdiagnosed conditions. And no, see, this is exactly what it is. So all of the things that you're saying here, Uzi, when you take a mental illness and turn it into a spectrum 4,000 miles in each direction, it tends to cover everyone. No, like that's literally not what's happening. You got to understand that there are very, very specific criteria to identify what is ADHD and what is autism. Okay. And the number of people that are being like misdiagnosed is really probably quite low. But what is happening instead is that people with these conditions learn to mask it. They learn to cope with it. And so they're at a level it's not disruptive enough to their lives for their parents and their teachers to say or do anything about it. But they really are suffering from the condition and underperforming what they would in life if they receive treatment. It really is. You have to understand the number of people, like especially ADHD in adults, the number of people that don't get diagnosed until they're adults and realize that all of the problems that they had in their life were due to the ADHD, and now that they have medication, they're solved. But they didn't know it for 20, 30 years, and how different their lives could have been if they had known 20, 30 years ago. It's like really, it's crazy and it's sad. And it's very frustrating when people come in and trivialize it and say, well, it's being overdiagnosed. You're not all really neurodivergent or special. It's not really that big of a deal. It really is. And these disorders are studied so well. Okay. Like they have tests where you can go in and we can really like give you a 98% chance you're ADHD or you're not. Tests that are that good. And we know the genetic markers that cause these things as well. That's the other big one is we we've mapped them out in the genome, right? So the professionals that deal with these conditions, like especially the people that like specialize in it, they really know their shit, right? if 1 in 40 diagnoses is underdiagnosed, then let's just say everyone is autistic. No, like, okay, so this is a good question. Yeah, okay, so let me try and paint the picture here for you, because again, like I said, autism was typically thought of as, you know, like a person that they literally cannot function without outside help, right? This is a person that ends up living with their parents for the rest of their lives. Okay, that could be my son, could be. Although right now they're just saying that he's just developmentally disabled, and it sounds like that they think that he'll be fine in the end, but we'll see. Man, that treasury came back, but because the curve was because of the way that the curve is coming, the 30-year is not coming back up, and so in the 10-year we're still only to 3.53, and I'm expecting us to get back to 3.15 if they're touching 25. Okay, so when you're talking about ADHD in particular, okay, if one of the parents has ADHD, the statistics are basically 50% chance that their children, that an individual child will be ADHD, right? Okay. If the parent has ADHD, for each child is a 50% chance that they'll be ADHD too. Okay. So when you look at it that way, okay, that's a trait that's actually going to be quite common in the population. Okay. According to a survey of patients, they're estimating that it's like 10% of people. Okay, like 10% of people is a lot for a disorder that severe. I mean, not that severe, but a disorder that can have such a negative impact on your life. That's really quite you know, that's a lot. Like that is a societal problem that has been overlooked, is what that is. Right. So then you get into autism, and the incidence of autism is like much lower, right? But you got to realize that, like, that why it's a spectrum. Okay. So why is it a spectrum? Because ADHD, a person with ADHD, they're just not paying attention, right? And because they're not getting the neurotransmitters in the right spots. So there are parts of their brains that just don't activate until it's too late, essentially, right? So a person that's strictly ADHD, they don't notice, right? But ADHD is also like where the chemicals are, is where the neurons will grow. So a person with ADHD, their brain literally becomes structured differently. It's just like this whole thing we were talking about, how, you know, like excessive internet usage changes people's brains, and that it's making kids, especially young men, be less ambitious, right? We're talking about the same basic functions. This is like the neurons want to grow where the dopamine is, right? So a person with ADHD, their brain is going to grow slightly differently. And for typical ADHD, it's just that it grows slower. Like they eventually, their brain ends up being the same as everybody else's. It's just, it doesn't get there until like 2 years later, right? Okay. Well, so you extend that and you get somebody that's more and more ADHD, or whatever the deal is. Then you get to the point where, okay, some of those brain structures do never grow, right? And then you get into even more severe issues where like the brain is just like severely different, right? And that's why autism ends up being a spectrum, and the ADHD becomes included in it, even though they're kind of like very separate things, right? A person with ADHD talks about ADHD nonstop and uses as a scapegoat for their shortcomings as a human being. Well, it is a good explanation for a lot of their, yeah, it is. I don't think, man, I would not trivialize it, man. Just imagine, okay, that every day you only got 4 hours of sleep, and then the only thing that was keeping you up and functional was, you know, a bunch of coffee. Okay, how well do you think you would perform at tasks? Right? That's basically what ADHD people are dealing with, right? Their ability to persist in a task and focus their attention where they want is impaired. It has very serious consequences. And in particular, like the most devastating ones is that it results in poor decision making, impulsive decision making by some people. I never really quite had that problem so much, but some ADHD people, they have really impulsive decision making, and it harms their lives. Yeah, it really does. You get people that everything else about them, if it wasn't for the ADHD, they would be like top performing people, and they end up amounting to nothing because they never get treated right. Like, that's the whole thing, is there are so many people that, like, they could have been really amazing, top performing, making lots of income people, and because they never got treated when they were young, they just struggle their whole lives. It happens a lot. So if you're a person, if you're in that situation, then you're going to talk about it a lot. I prefer not to. In real life, I would prefer people not know, because like again, you get treated differently and it's not to your benefit. But here on the stream, it's like, I don't give a shit, because what you guys think of me doesn't really matter. I mean, of course, maybe it hurts the YouTube channel. Maybe the YouTube channel is not as strong as it would otherwise be because of my ADHD tendencies, but growing the YouTube channel isn't the primary goal here, right? So it's like, fine. Especially since a large part of the audience is gonna have it, right? Like, if ADHD is like 10% of the population here, I'm gonna bet you that my audience is like 20 to 40%, if not higher. Like, because ADHD people are drawn to trading because it's such a consistent, everlasting source of dopamine. Nothing else in the world. No, ADHD is 10%. 10%. But again, so there are like 3 or 4 genetic markers that cause this. So the thing is that there are deficiencies in different proteins that can cause this, right? So again, and like I was saying, like, if you don't get enough sleep, right, or your nutrition is bad, then in other words, it's possible for a person to simulate having ADHD, because it's just not having those neurotransmitters. So if you get yourself into a situation where you don't have enough of those neurotransmitters in your brain, then you're going to experience the symptoms of ADHD, even though you don't have it as a genetic cause, right? I always find it really interesting where once you start to dive into a subject on a really deep level, all of the consequences that come about from something like that are kind of counterintuitive, right? That's kind of the thing, is like, it is a genetic thing, but it's like the symptoms are caused by specific chemical deficiencies in your brain. That means that like a broad spectrum of people can experience it to different degrees, right? That's ADHD. And then you get into the autism, where, you know, because of whatever reasons there are, and I think that there's a broader range of reasons for autism, their brain just grows differently. Not, I wouldn't say it's broad by design. because this just comes back to there's very specific reasons why this is caused. It's quite well studied, it's quite well understood, and there is a very, very effective treatment for this issue, right? And if you have the issue, even mild forms of it can have significant negative impacts on your life. So it's not that it's broad by design, it's that it really does affect a large swath of people, and it really is a serious issue that they should treat. Well, the taking stimulant medications is a very effective treatment. There are coping strategies as well. But kind of the issue with the coping strategies is that, again, because you're ADHD, you kind of lack the persistence, right? So really the way to go about it is you take the medication, and then because you have the focus from the medication, you learn the coping strategies, and the coping strategies stick. So that then if later on in your life you don't want to take the medication, the coping strategies still work. Because those become ingrained in your patterns of behavior. Medications for life. It doesn't have to be for life, but yeah, you're talking about like a $5 medication. See, because what you're doing is you're implying that the medical community has a vested interest in having this thing being overdiagnosed to get as many people as possible on this medication, etc., etc., etc. It's really not the case, man. Like I said, we have identified the specific genetic markers that cause these symptoms. The symptoms are really quite well understood, and the people that are experts in this domain, they can spot it immediately. Like a person that's not used to it, it might seem like an amorphous, vague thing, but for the experts in the industry, it's not. So the number of people, the only reason why it would be like overdiagnosed is because you're getting diagnosed by somebody that's not an expert in it, right? Like a lot of people, they end up getting their treatment just from their regular doctor. I understand the mentality of people who own pharma companies in this country, but I also understand the science behind this particular subject, and the insinuation that this condition is really just a figment of people's imagination that is being overprescribed because pharma companies want to make money is absolutely ridiculous and offensive to anybody that has that condition. It really is. To come in and say things like that, you just don't understand the subject. If you understood the subject, there's no way that you would say something like that. Like, seriously. It has nothing to do with that. This is a real issue we're talking about, man. Right? You're trying to compare. You're trying to compare a shot using very, very new, completely new technology that we really don't completely understand. It's only been around for a year or two, and was frankly kind of rushed out because of a really stressful situation, right? You're comparing that to the most studied and understood psychological condition on the planet, right? It's a completely different thing, man. Right? Like what experts say in a fluid situation where we're still trying to understand the thing, because like honestly, even now there's still a lot of things about COVID and the long-term effects of COVID that we don't understand, right? ADHD and the treatment for ADHD is the most widely studied and understood psychological condition out there. Straight up. still kind of rotating around 21 now. So that second little leg down from 25 was a little bit, that's really showing like some stress in the market. But now we have gotten into the liquidity hole aspect of things. So if we're going to say that second leg was when it happened, then we shouldn't be expecting more movements until maybe the open of the S&P 500 here. So what makes one set of experts more trustworthy than the others? Empirical evidence. That was an easy answer. The prevalence. So again, we can explain the prevalence of it, right? If you have ADHD, your 50% of your children will have it too. Okay. Like the prevalence for it is going to be just as prevalent as like blue eyes. Or is it blue eyes? I guess blue eyes is double recessive. So it's going to be more common than blue eyes. Right? Like when you think about that, 10% is not a lot, but it's also a lot, right? When you take 10% and you take that across the population and you create an online community out of it, that's a huge community, right? That's one of the largest communities that you're going to see out there, and that's what's happening. Is that the ADHD people are realizing that they're a community that can come together online, and that there's real benefits from coming together as a community, and so they're starting to create their spaces. 10%. Not everyone is on the autism spectrum. No, that's not there's absolutely nothing accurate about what you just said at all. So we're talking about like two categories of a problem, right? One is the neurochemical deficiency, and the second is a difference in brain structure, right? Neurochemical deficiency can create the brain structure. So especially when you're talking, everybody's brain is different, man, right? Everybody's brain is different, and even your experiences change how your brain gets wired together, right? So of course, how people experience those symptoms is going to be a broad range of experience of symptoms, right? So the reason why we call it a spectrum is because the range of your symptoms can be very, very different, but the causes that create those problems, we can pinpoint those very specifically, right? And if we had, if I showed you the last 40 years of autism rates, I would almost guarantee that they would go up, because again, this is an issue that people looked the other way and was underdiagnosed. There are severe problems that people have autism in, but so kind of depends on the antisocial behavior that you're talking about, right? Because a person with autism or ADHD, they might be defiant and they might make poor judgments, but they're usually not outright malicious. So you're saying that despite its cumulative increase over the last 40 years, well, of course, there's going to be a limit to their prevalence. It's not going to be suddenly become 60% of the population or something like that, right? checking here, the dollar isn't really moving. Well, we did see a good move up in the dollar, but it just doesn't seem as extreme here in the Japanese yen. And move in the dollar is definitely there. Seems to me though that the volume in the treasury was totally there, so I think that the movement in the currencies is probably more related to the interest rates more than the other way around this time. You think that the science needs a lot of work and none of it's proven? Then you don't understand the science. Like I said, this is the most heavily studied and understood psychological disorder, right? They have like the specific genetic markers that predispose you to the condition. So if we had that whole Theranos thing where they were like, yeah, we're just going to test your DNA and tell you what all of the problems are. Well, it was BS. Okay. But if we lived in that hypothetical future where, you know, it's like, what was that movie? Can't even remember anymore. But a future where genetic testing is easy, that you can go to the store and you can get a complete diagnosis of your entire DNA profile for $20 or something like that, right? Then that would be how we would that's how we would identify if people had ADHD, is we would do their genome and we'd see if they have the genes. Like, that's how specific we have it. Because I can come in and I can take any individual person, do their genome, and tell them you have it or you don't have it. Yet the genes cause the disorder, right? They may exist to help people survive in certain, maybe, but the reality of it is that it might provide you you might be more curious, you might be good at going around and finding things and stuff like that, but it has other really negative impacts on your life. Like the insinuation that we shouldn't treat it is kind of like, well, these people, they could probably make $120,000 a year, but we should not treat it and let them stay at minimum wage. Like, that's really what you're saying, because that's what ends up happening to a very, very large swath of ADHD people. Because they never get the support that they need and they never have successful careers. By nature, most of us? No, that's not. Like an ADHD person typically makes below the median wage. Okay, like they underperform compared to other people. They do. Yeah, well, maybe you're ADHD. I don't know. One of the things that makes this condition kind of difficult and controversial here is that you have a kid, they're struggling in school, right? And what's the parent gonna say? Oh, well, everybody experiences that. I was like that when I was in school. You just have to trudge through it, etc., etc., etc. Why is that? Because you have it too and you were never diagnosed. This is literally what it is that they think that these things are normal and that everybody experiences them, and it's not. I wouldn't be saying that's placing the blame at parents. It's just an explanation, because ultimately the cause is still the condition, right? But we're just saying the way that this condition plays out makes it more difficult for people to recognize and receive treatment than compared to other disorders, right? The condition that everyone who doesn't do good in school and find a career that pays 6-figure a year has. No, I mean, it's not everybody. There's a really wide swath of people that don't do well in school and don't amount to anything, that don't have ADHD. They're just not well, I don't know. They don't like it or whatever the deal is. How much lower does a person with severe long-term insomnia make than a normal person? I don't know. I would think that it would be pretty severe. That would be pretty severe. A lot of people that have long-term insomnia might not be employable. So it might be similar to like autism. So I was saying this study, the kind of the thing that started this was, I saw a study that said that only 30% of people with autism were employed. And I'm like, well, so first of all, I think that the overall employment among, if you're looking at like everybody, is not as high as you'd think, right? Because a lot of women don't have jobs, right? So it's not going to be like 80% like a lot of people would think. But 30% is really low. And so I'm sitting there thinking, well, how autistic were we talking about? Or are we talking about these people who were kind of only like mildly autistic to the point that they didn't even get diagnosed as a kid? Are we talking about that group of people? We're talking about autism spectrum disorder. So when we're talking about ADHD, the genetic marker assessment for ADHD should be close to 100%. Let's see here. Where would you get that? Less than 3 hours of sleep a day on average. Jeez, man. 5 to 14%. Oh no, wait. So yeah. So ADHD, as far as we can tell, is like totally a genetic thing, right? When we're getting into autism, we're getting into a little bit more complicated bag, right? Because autism, it has more to do with like the structures of the brain being different. So like I said, having severe ADHD can cause autism. But autism can also be caused by other factors as well, right? So there could be other genetic factors, or it's going to be genetic mutations that might be unique to that person that could cause it. But it could also be caused by environmental factors as well, right? And I don't know like what the incidences of that are, but that's why the thing that I'm trying to get across here for anybody that might think that they have those disorders is that you being ADHD doesn't mean that you're autistic and vice versa, right? But there is a link between them. and it's probably more the case that, like, you know, like, here's the 10% of people that have ADHD, and then there's a smaller contingent of people that have ADHD and it causes autism. We'll see where my child is at. So there was a little bit of a downside move there. And the spread in the micro 10-year is really wide right now for some reason. So it's kind of turned into something I don't want to mess with. I really, when I came in here and I was like, wow, it seems like there's something going, I really should have just taken it then and there. Because the issue that I keep seeing is that in myself is that I can see that there's some sort of a flow and I want to wait for a better position. And in those cases, it's always that I should have just gone in. Should have just been aggressive. Like gas stoves. Well, I tell you what, I feel like on that issue, I think that some politicians are really kind of abusing the science in that instance. But from what I can see, a gas stove in your home can be a bad thing if you don't have adequate ventilation. And that really what should be happening is it should be required in the codes for you to have ventilation over your gas stove. Not that we should get rid of them, right? It's kind of, I think that's an interesting issue to look at. How liberals react to that is like they get a piece of information. And then, so that's like, oh, well, so we need to ban it. Okay. And then I tell you, the other thing is like how quickly the whole left like comes in and gets in line on an issue that nobody cared about the week before is a little scary, don't you think? It's a little scary. Now all of a sudden all of these states are trying to put through, you know, California's trying to put a ban on gas stoves, and I tell you what, the level of like this is the issue that I see with the left right now is that they'll take a piece of information and they'll immediately go, oh, okay, that means that the government needs to do X. And it's like, dude, you don't even understand the problem yet. Like, you understand how crazy it is to like ban gas stoves over the whole United States, like how big of a change that is, and like the economic, like you haven't done any study about what your policy is going to do at all. You do not understand this thing at all, and you want to do something already. It's just nuts. It's just immediately. So I tell you what, ban gas stoves that would, you know what, nicotine addiction also a symptom of ADHD. very is people with ADHD get addicted, especially to cigarettes, more easily than other people. So the stock market started out looking okay. The open though has this first bar on the open hasn't been the best. Yeah, you've been smoking for 16 years. I mean, that's kind of a hard one because even a person that is not ADHD is going to get addicted to smoking and have a hard time quitting. Oh, man, especially if you started so, well, 23 is actually. Like, if you started smoking when in your teens, man, that's super hard to overcome. It looks like maybe the Treasury digs this out. I think that what's happened is we've kind of come into the liquidity hole and now we're trying to see somebody try and swing it the other way. So I am seeing buying on the 30-year end of the curve especially. You know, you gotta smoke probably. I really think that an average person is probably going to come into my stream and have a hard time, right? Because one, I'm going to take like a much more empirical approach than any normal person would about things, like a logical approach. This is not going to appeal to people because, like I said, a lot of it has to do with like the way you say things. So it's like the intonation in your voice and everything. I'm just trying to like use the words as clearly as I can, you know, and I'm not really trying to be super, like the way that I say it is super comforting or something like that. It's just not me, man. And even if I was trying to do that, I wouldn't be very good at it. You know what I mean? And then on top of that, just what we're doing is kind of hard to follow. I'm trying to get this, you know what, I keep getting to like, I don't have a whole lot of time during the weekend and I end up like watching the baby too much. We're still in that time period and we're getting close to the time where I really have to watch the baby because now he can crawl. So but I have this PDF that I have almost done that I'm trying to, you know, I think that will help a little bit because then people will know, okay, these are the things that actually matter and what he's actually trying to do. But and I don't really know a whole lot about insomnia and what causes it, so I like challenging you even if I'm wrong because you don't seem used to it. No, so you see, like that's where you're wrong. Right? So really what this is Seth, it basically gets challenged about everything all of the time, even when he's 100% confident about what the particular thing is, and it's very clear that he's correct, right? And why is that? Because people, one, because the markers of like, I know what I'm talking about, they don't get them from me, right? I don't come in and get really haughty about it. And yeah, this is like the narcissistic part of it, right? The way that I say my words and my sentences can often come across as somebody that's not confident about what they're talking about, right? And then when I'm going to respond, they're gonna think that I'm getting flustered about it when I'm just being my regular agitated self. You get the same shit from talking to people around me about trading? Well, trading might be a different issue, right? Because in trading, we're fighting back against 40 years of misinformation to the public about what trading is actually about, right? So in trading, if you tell people the real stuff, they're almost never going to believe you because it is antithetical to what they've been taught culturally. Like really, you think about it, man. What we know about how markets works, it's not just like that. That's not what I always thought when I was growing up in school and saw stuff about trading. And it's not just that. It strikes at the heart of how we view the world, right? Because the entire American viewpoint for the last 40 years has been markets are perfectly efficient and we should just go along with whatever is the best thing for the market, right? Well, if you come in and you point out that the markets are inherently inefficient, right? So I had an experience with this. On Friday, I made a video talking about the inefficiency of markets, and I was saying, look, the reason why all of these kids are so skeptical about capitalism and are flirting with these other more extreme ideologies like even communism now at this point, the reason that they're doing that is because we're telling them something that's so visibly not true. We tell them that the market is perfectly efficient and that we should just always go along with whatever is the best thing for the market, and that's clearly false. And that it's not just that it's clearly false, it's that every experience they've had now, the millennials and down, is basically that's total bullshit. And you're using this as a cover to undermine us and, you know, take money at our expense. That's what they're seeing, right? And if we were just understood the truth, then they would understand that you know, free commerce and private ownership of business is really the only way, because that's the only way to get all of the information in one spot and to create a system that's properly incentivized to create economic growth. That's why we have capitalism. That's why it works. And the efficient market nonsense, that's not why we do it. That's not why we do it. The market is pretty efficient, is probably more efficient than other systems, but ultimately it's not efficient, and that's why we're always going to run into situations where we need to change things. So when I made that video, the whole thing that people will come in is like, well, this is a straw man because we already have too much government intervention in things. But I'm saying, like, no, the inefficiencies that I'm talking about have to do with the very way that the market works. Inefficiencies inherent to using a limit order book, to using a market in general. Okay, doesn't matter how you change all of those other, you know, these rules. You go and you get the market to exactly what you think is perfect. All of the government regulations that you think shouldn't be there or should be there or whatever the deal is, these inefficiencies will still exist, guys. That's the whole thing, is that they're caused by the market. There are inefficiencies built into the market itself, so they will always exist, right? But we've all been trained into this kind of like, it's government intervention or not dichotomy by politics that we've been trained into, right? So what we know strikes at the very heart of the economy and politics as we know it. So much so that it's kind of hard to like talk about it to people because their frame is so different from ours. No one asks me about trading in real life besides that one guy in my TA class. So eliminate the limit order book. All orders are market orders, stays on top of the book till filled. How would that work? How would you decide what a price is? Right? Because limit market orders don't have a price attached to them. So how would you decide what the market, what the price is? I decided to buy, I hit it. What are you hitting? Yeah, you decide to sell, you hit it. What are you hitting into? There's no limit orders. right? You're hitting into other buy market orders that aren't actually buy market orders, they're limit orders. And how do we decide which price those get stacked at? Right? It stays top of the book till filled at LTP. What's LTP? So then you do have limit orders. What you're saying is you do have limit orders, but you don't get to choose whether your order becomes a market order or a limit order. But what I'm saying is how do we decide which prices those are at, right? I mean, you said eliminate the limit order book, but you're not really quite. I don't think what you're saying makes sense. Nor would it eliminate these inefficiencies. The top stays. So what would determine if it was a mark? So like, here's the thing. Nothing's going on right now, right? You put in a buy order. You're the first person to put in any, there's no orders in the market. You're the first person to put in a buy order. Okay, so it goes in and it becomes a limit order and sits there until it gets filled, right? At what price? If you're the first person to put any order in there, what price does it go in at? I was asking, well, yeah. But I mean, yeah, I was just being one. Yeah, whatever my gut says. Because as soon as the person that submits the order puts a price on it, it's actually a limit order, right? So that's what I think is interesting about it, though, right? Is that, okay, is there really another way, a better way to do it? I don't think that there is. I don't think that there is a better way to do it. And the whole thing is that if there was a different way, let's just say that there was a different way of doing it, guess what? That's going to come with its own set of mathematical properties that come into it that are going to create a different set of inefficiencies, right? So like that's why I use the term the order book, because that's like the most specific about the inefficiencies that I'm talking about. But really what we're getting at is that the very nature of commerce creates inefficiencies, right? We want to think that there's this world that's we can kind of perfectly fit everything to in some sort of model, and that everything will just be perfect. And the reality is that's just not the way that the universe works. The universe is really incredibly complicated. And in order for us to explain the complicated mechanisms of reality, we have hundreds of equations to be able to do it, right? Why? Because reality doesn't fit into this nice box where you can just use one algorithm and it solves everything, right? My philosophically, I would say there was like, what is it? The everything equation. It was hypothesized by Einstein. There were like, maybe there's this equation that could explain all of the other equations and everything. I philosophically, I believe you'll never see it. I don't think, because I think that that reality is complicated. I think that reality is complicated and defies simple explanations. So it doesn't matter how complicated or sophisticated your system is going to be. There's always going to be a problem in there, right? So it's foolish to say that, we just need to set the rules up and then never touch it. Essentially, that's never going to work. there's always going to be an inefficiency that you have to manually account for, which means, yes, unfortunately, there will always have to be government intervention in markets, right? This is not a popular thing to say. Like I said, it contradicts like everything that we've learned from politics in our culture. So it kind of presses against both liberal and conservative talking points on the economy to some extent. Probably more so Republican talking points than Democrat talking points, but yeah, I've used ChatGPT. I don't really find it. Let me tell you something. An unpopular opinion on ChatGPT. ChatGPT is only interesting if you don't have skills. Right? If you know how to do something, you don't care that ChatGPT can do it because you can already do it yourself. And I guess the thing is that the skills that I can't have, that I don't have rather, are not things that ChatGPT can do for me. Right? ChatGPT can't edit a video for me. Theoretically, an algorithm could edit a video for me, but I've tried a couple of different things and stuff, and it's just not up to par. Maybe in a few years. I can just put all of the I just upload the full video into the thing and it just splices it up. Maybe. ChatGPT fails if you ask it how to make a cake? Really? I guess that might not surprise me. So the treasuries have come back now. There was kind of did come to the points that I was thinking about. So am I interested in it now? I'm not so sure. I feel like there was a large meta order short. I think that they're already done with their order. So I don't know what the next catalyst would be. I don't think that taking a trade at this exact moment that I really can come up with a good enough reason for it. ChatGPT's at capacity right now. So here's the other thing about ChatGPT that I feel like that people aren't thinking about. Okay, this is a for-profit enterprise. Okay, you know that they're not going to keep it free, right? They're going to cripple it in some way and then force you to pay a subscription fee to uncripple it. That's what's going to happen. So I go to ChatGPT right now and it's at capacity. I'm sure there's more people using ChatGPT today than there at 8 o'clock in the morning than there was people using it at 4 o'clock in the afternoon a month ago. Don't think so. Why, when I don't trade, I always feel, yeah, me too. But I always feel better when I'm missing trades rather than taking trades that I shouldn't have taken, you know? I want to be more aggressive. I just don't know quite sure how to temper that with with the, we need to have a good reason to trade. Anyways, so I think that this ChatGPT at capacity is all just kind of part of the plan so that they can introduce a $50 a month thing for you to use it. And you know what? I personally do not feel that what you can get Chat GPT to do for you is worth $50 a month. Could be wrong, but why when there's no news? I don't know, man. Well, I do know, actually. So going back to our opening monologue here. First of all, we are in the Federal Reserve blackout period. So starting last Friday, no Fed speakers until the Federal Reserve meeting. They're not allowed to speak publicly until the Federal Reserve meeting. Okay, so this is the first part of it. So you would think that the market would kind of be in a holding pattern until next week when we have the Federal Reserve meeting, right? Wait, is it next week? Or it is next week, right? So it's February 1st. Yes, February 1st, next Wednesday. Okay, 10 days away. You would think that we would be holding for that. But at the same time that that's happening, we have come into an interesting confluence of bullish flows. So more money gets put to work and buys into the market the second half of February than at any other time of the year. Okay, so February is like the month that's most likely to be positive. Remember last year that when January was down, then when we ended the January down last year, that everybody took that as a big can we call it a predictor? It was a bad omen for the rest of the year, right? It's because that's when the most money gets put to work. Okay, so you have that. There's also, we were in a blackout period where corporate buybacks weren't allowed because of earnings releases, and it's different for every company, but the period where we're like the peak earnings blackout, we're past that, so that helps. Then on top of all of that, the CTAs are kind of all turning long in their models. And because we're at all of these key moving averages in this 4,000 level. And then the big one was we had options expiration. And that options was kind of putting a cap on the market last week and was kind of weighing on volatility, paradoxically, contrary to what we thought it would happen, but it was a cap on it. So now that gamma is gone, that frees the market up to do stuff. So I'm not surprised to see a strong bull run in the S&P 500 worth 20 points. That's not unusual or odd at all. The thing that was odd was the treasury market coming out and selling the treasuries like right off of the open so aggressively. That was unusual. So no news. What? Why didn't you trade it? Well, I mean, my portfolio is still long. But you're right, I missed out on the treasury. So when I was doing this, so it was basically like I came in, I finished looking at all of the markets and everything, and I thought 3.5 would be great, and we were already at 3.51. So we were at 3.51, and I was like, well, so we already got a pretty strong impulse. I don't know if it makes sense for me to try and, sell it from there. And then it just went fast, man. It was a really fast kind of out of nowhere. I wasn't expecting a move like that today. So, if I didn't have a predictor of order flow, why would I have taken a trade? I'd only be taking a trade because I saw the flows were unusually strong in a certain direction. But you got to be careful with that because again, if you're trying to tag along, by the time you see it and it's really clear that there's like a strong flow to the downside, you're really, really likely to get stuck in the liquidity hole, right? So the only trade that I could have taken would have been around here at 3.515. So it did go further, but then like it's climbed it back. So if I had taken a trade and tried to hold it all session, I'd be break even right now, right? I don't know if they really gave us super good signals when we were at the lows either for to like reverse or anything. So unexpected flow in the equity market. That one was coming. Now, the warning I would put on this, though, is that all of the flows look bullish, but the sentiment is still incredibly negative, and people in particular are expecting earnings revisions down to push the market down, right? So there's going to be this push and pull. So today, if we continue to move up and we close up, that could be really, really good for the week, right? But I wouldn't count out the possibility that this just completely reverses and we close down, and then that pushes the sentiment far enough down, far enough the other direction that this week ends up being dismal, right? We're we got a really, really good indicator that the positive flows are indeed coming in this week here with this open, but we're not to the point where it's like we've crossed a threshold and now the rest of the week is going to be good. We're still kind of in the middling area where it wouldn't take much for it to flip back down, and right. Earnings revisions went well. So what we're talking about with that is that when companies report that their actual earnings aren't as good and the forecasts that they give for the next quarter are not as good. Right. That's what we're talking about. So it's going to be different for every company when they report and so on and so forth. So kind of what that theory is saying is that as earnings season drags on, that it's going to become more and more clear that the economic outlook doesn't look good and it pulls the thing down. So the big thing here is that is kind of like a fundamental approach to stocks that we know is that the fundamentals aren't what moves markets, right? Orders are what moves markets. That's why our propensity is going to be to go with the flows that we see here, with the understanding that sentiment and those earning revisions could crash a threshold where all of these flows turn negative, right? ChatGPT signed a multi-billion deal with Microsoft. Yeah. So Microsoft seems really attractive to me right now. Like it's underperformed. Like the whole tech space has just been savaged, right? But Microsoft has kind of underperformed relative to its peers, even though I think it's the strongest of the companies right now. I personally would rather own Microsoft than I would Apple, Amazon, Netflix, any of these other big tech companies, especially Apple. I'd rather own Microsoft than Apple right now, because I think Apple is trash, and I think that people are starting to figure it out. And then you got this ChatGPT thing on top of it, so Microsoft could use it to make that foray into the search space that they've always wanted, right? Like it could grow Microsoft a lot. There's a lot of growth potential in Microsoft right now as it stands. So yeah, might not be the exact right moment because there could still be some. I tell you what, it's kind of a weird thing. It's either like the low is behind us. Well, there's always a binary choice, it seems like, isn't it? But it's either that the low is behind us or like things are about to get really, really ugly. Elon should have bought it. Elon's got too many things on his plate right now, man. I was watching this thing where, talking about Elon. I didn't realize how recently this was, but like from 2018 to 2020, Elon Musk was like literally sleeping on the floor of his factory and crap, because basically the whole production line was like a complete mess, and he was there with the people every day to help them fix it. Like he really put the blood, sweat, and tears into it, and it paid off in a big way. Like we look back on when Tesla was doing poorly And then it ended up being like the darling stock after the, in the post-COVID bull market. And it was all like, oh, why were, we should have known sort of a thing. Well, no, because when that all started, Tesla really did look dismal. It really did look dismal. So, of course, it was overbought, but credit where credit is due. They really pulled off a miracle over there. You have 20 shares? Well, okay, cool. I had a friend that, man, sometimes I wonder, like, was he actually Elon Musk? I had a friend when we were doing Unreal Tournament that was really involved in it at the beginning, that just seemed to have, like, whatever it was that we wanted to do. If we wanted, like, servers and stuff, it was like he was willing to front the bill for it. It's like, where do you get all this money? He's like, what do you do for a living? I was like, oh, I don't really work anymore. I got so lucky with Tesla, basically I don't have to work anymore. And I'm like, because now I'm thinking back on it, like, this was a long time. This was like almost 10 years ago now. I'm like, he must have been like really early in on Tesla or something, or he's Elon Musk. Like, kind of funny to think something like ChatGPT will probably start putting programmers out of work way before robots kill the service industry. Probably not. So, like, I tell you what, the technology, the software industry has been in an interesting spot for a really long time. So, let me try and explain why I say this. So, when I went to school, the things that they teach you in computer science are like, here are common algorithms, and here's the complexity of them. Like, how many times will this loop run based on a certain data set, right? Well, this one has to run once for every element in this array, and once for every element in this array, so it's x times y, right? So it has complexity of x squared or whatever the deal is. But then you can like put it in a binary search tree, and then it becomes x log x or whatever, right? Tricks to reduce the complexity of it, right? And so this kind of comes into this world of Leet Code. So there's a website called Leet Code that you can go, and it will give you a question, and then you're supposed to program a solution to that question, and then it shows you how well your solution was in terms of memory use and speed compared to everybody else's, right? Okay. So this is kind of the world that we are trained in software development and in computer science. And that kind of approach, like that specific kind of challenge, like I need to make an algorithm for some weird situation that's popped up, and I need to reduce the complexity of it, yada, 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 like almost never comes up ever in my job. Right. So the last week we spent was trying to figure out the correct property to put into HA proxy to get it to pass the correct headers and do NTLM authentication. Right. So basically getting the configuration of this particular program to work correctly. Okay. No algorithm problem solving sort of thing at all. It's just searching their documentation and trying to figure out something that, nobody has specifically said you can do, and here's how to do it, but getting it to apply to our situation anyways, sort of a thing, right? So essentially, most of the problems in the computer space right now have more to do with managing existing systems and getting everything to play together, right? So monitoring systems, moving them to the cloud, it's like a lot of configuration, for instance, right? So this is a problem that GPT can't solve for me. Can't. I mean, theoretically it could. You could say, make me a solution that does X, Y, and Z. But the reality is because I'm trying to get it to do something that like nobody else does, there's not going to be enough code. It's not going to come up with that configuration because there's just not examples of it out there. Right? And the bigger thing is that a lot of this is kind of like not the complicated deep problem solving that we wanted to get into. A lot of it is kind of boring and mundane, and it's really kind of odd that like we got this whole class of problems that requires like a really, really broad spectrum of knowledge to do. But so there is this part of the industry that is kind of like stuff that nobody wants to do that ChatGPT could at the very least very dramatically speed up, right? Because you still have to have somebody there to check the code and make sure, see what it's putting together, and because that code that it generates like often doesn't even work, right? So the application of this has been like in Visual Studio Code, there's Copilot, right? So you can type some comment about like code that does X thing, and then it will try and generate something for you, and then you kind of work from there. So it could speed things up, but you get over that. Like, I guess what I'm saying is that like the problems end up being like so specific that you end up with this work that feels kind of mundane, and yet the AIs probably aren't capable of doing it yet. In other words, I do not see the earnings from that programmers make going down, at least not in during my career. We would just move on to a different set of problems maybe. But that's always been the industry. Like right now, the set of problems is moving to the cloud. I don't get PPI and retail sales were negative last Thursday. The market sold. Now the market bought it back so quickly. Well, from now on, stop explaining and using information. Well, no. So they're just very easy to explain this stuff, right? So when we had the PPI and in particular the retail sales, that information suggested that the economy is going into a recession and that the economic situation is a lot weaker than the employment suggests. And that change in expectations about future fundamentals and flows caused people to sell it that day, right? Well, now we come in here to today. How many people are still selling about that? That happened like 5 days ago, right? They've already traded it, right? So now we're trading a different set of things. In this particular instance, and I don't want to go through all like 5 of those things that we gave, but there's positive flows coming into the markets. And guess what? This is the big one, the big thing that, again, like I gotta point it out because like this is the part about it that is like makes it so much of a conundrum. But when you understand this one thing, it kind of explains everything, right? The most powerful flows in the markets have nothing to do with the fundamentals. The most powerful flows in the markets are all passive. They're like index funds rebalancing and stuff, okay? So right now in January, we're coming into a period where money managers put a large portion of their money to work. Yet you're going to see buying this week. And it doesn't matter what happened last week, right? Because none of those fundamentals have an impact on this money that needs to get put to work at all, right? So that's why we got to understand, do fundamentals move the market? Yes, but they're not the only thing that moves the market. And any set of orders that comes in, regardless of whether it's fundamentally driven or not, is going to move the market. And this is why you can get paradoxical moves that seem to contradict everything we know about the fundamentals. And what you should be doing is you should be looking at that stuff and saying, well, this is an opportunity. Because number one, those flows are passive. That kind of makes them more predictable, right? So for now, next time around, next January 20th or whatever it is, right? You should be thinking, oh yeah, a lot of money gets put to work at this time. I should factor that into my trading, right? So that's the first thing. It's because those are passive flows that kind of are a little bit easier for us to predict, right? But then the second thing is that if we really do believe that like the economy is going to go into a recession and it's going to be really, really bad, then now is the perfect time to short the market, right? I'm not so sure that it's quite so clear. I kind of believe that the bottom usually happens before the bottom in the market usually happens before the bottom in the economy. And so it's entirely possible that we've already bottomed in the market. Yeah, you know what? That's a really good observation, Nasdaq Killer, that they usually happen in no news Mondays. Like what I've found is that if you have like a no news day, and I think that like a no news Tuesday would be even better example. So if we have a no news Tuesday, what do? Well, I would say about 60 to 70% of the time on a no news Tuesday, it's just like boring and nothing happens. And it's like the most frustratingly dull trading you can possibly imagine. And then like 30 to 40% of the time, you get these insane trends, right? Because if you are you're a fund and you have a large meta order to execute, you kind of want to avoid the news to some extent, right? Because liquidity is going to be less during news. So if you can come in on a day where it's like nothing is supposed to happen, right? Like that's a great time to come in and execute a huge order. I think that's what happened this morning. I don't know what it was that drove it, but somebody definitely decided that they were selling today and that they were just going to dump as much of it as they could early as they could. Because they just came in super aggressive, and then you can kind of see this market like after that order, the market's just kind of been nonchalant, which suggests that yeah, it was like one big guy selling and they're done. I hate funds. No, you gotta love them. Because the funds leave so much inefficiency behind is why we're even able to pick up scraps, right? I don't think it'll last forever. I think that at some point, you would think that index funds will have to lose their edge to some extent. Like it could become that the costs of running an index fund just become so high that they're no longer very beneficial, because too many retail traders and funds and everything will have figured them out, essentially, right? But for right now, most people don't understand what's going on, and we can use that to our advantage. And when that happens, I don't know what the consequences are, but it'll be interesting. I don't see this situation where the most sensible thing to do is to just put your money in an index fund and leave it there forever. That just can't last forever. I don't think that can last forever. It could last for like 100 years, but I don't think it can last forever. Maybe it doesn't fall apart in our lifetime, but I think at some point that there's going to be a great index fund crash or something like that. Actually, it could. I am concerned about as more baby boomers retire and they're taking their money out of the markets, how that weighs on the market. So my father, he'll be retiring next year, I believe. You know, and so he already basically took his money out of the market and put it into fixed income instruments and stuff. So, you know, that's where I'm kind of getting at, like how many baby boomers are pulling their money out of the markets here in this point and stuff. It's got to be happening. It's got to be coming. SPY is going to expire in less than 100 years, so there's that. I don't know why I was thinking about this the other day, but I feel like that at some point, I remember why it was. So this 0 days to expiration options thing is a really it is a significant change in the market. I think that we need to study it a little bit more, understand what the impacts are. I haven't seen any research on it, but there's got to be already people researching this stuff, right? It's really affected the markets, you know? But I kind of wonder, would the 0 day to expiration options matter as much or be as popular if the S&P was like 1/4 of the price it is now? You know, if we did a 4-for-1 split and we rebalanced the S&P 500 back at 1,000 instead of 4,000, you know, would that affect those instruments? Because I feel that the liquidity in the S&P 500 is, you know, the price going up so much has negatively affected the liquidity in the market, essentially. Oh, the actual ETF is going to expire? Oh, that's interesting. Surely they would just extend it by that point, though, wouldn't they? How can you kill FOMO with a gun? Well, I'll tell you, here's how you do it, NASDAQ killer. After you've been doing it for years and years, after you've been doing it for 5 years, you'll have seen so many insane, crazy moves that you didn't expect and that you did expect, and ones that you got right and that you got wrong, that you never sit here and go, oh man, like that was my chance to catch it. You know, that was really important for me to have caught that. Nah, you never say that anymore, because you know that the market will be open tomorrow and that you have just as much of a chance to make a big amount of money tomorrow as you did today. That's how you overcome it. So you just get so used to it that you just don't even care anymore. It's just a part of regular everyday life that moves happen and sometimes you miss them. Of course, I still get upset when I miss a move that was a good one, but you know, I get over it, right? I don't sit and beat up myself about it all day like I used to. The 0 days to expiration are the oldest and most studied options. Well, no. But that's what we're saying is, what is the effect on the market of 0 days to expiration options becoming like 60% of the options volume, right? That's the thing that I don't know. That's the thing that I don't understand. Is it seems like the market is behaving differently because of it, but what those exact behaviors are and how I should be trying to take advantage of, I'm not sure. Ideas there won't be any big movement inside the single trading day. Well, so this is the other thing that I don't understand, is I just don't understand what's driving it. I don't understand what's driving it, because to me, 0 days to expiration options sound like a fool's trade, you know? Like, doesn't sound like buying those would hardly ever work out for you. Pure gamma into delta doesn't do anything. It's definitely doing something to the market, though. one thing it does seem to cause is that if there is like chasing into the close, like those panic bids at the end of the day are like way more dramatic. Like Friday was a little the when you really look at that close, Friday was a little crazy to some, you know. Yep, it's allowing you margin efficiency on the longer positions. Well, like I can remember actually, like in 2020, when we started going into the bull market and it was like a panic bid at the end of the day, and being so surprised by all of those at first, right? I like some of those flows that started coming in, and that was when we learned about how the gamma was moving the markets and how the amount of options that were being traded were kind of creating this extra volatility. So you know, once we learned that stuff, some of that movement became really made a lot more sense. But now we're seeing it in like all situations, and like some of them are still really surprising. I think that one on Friday was really surprising, because it used to be that on an options expiration day that just nothing interesting would happen, you know. The markets have definitely evolved. Like, you know, I thought that S&P 500 in 2018 was tradable, and now I look at those spoos and it's just like, yeah, it looks like a madhouse. And yeah, you'll make money if you're going long in the, generally speaking, but it's kind of a crapshoot. You're just taking advantage of that stocks tend to rise, and it didn't work out for you very well last year, probably. You know, it's like that. Depends on what you were expecting that the outcome. Yeah. Definitely there, like 2020, that initially it was like every day. So like the big thing was like outliers on so like if you look at what the VIX is at the start of the day and use that as an expectation for volatility, and how would they perform relative to the expected volatility, starting in 2020, there you just started to get really big outliers on that. Why would you expect? Well, so we just take that expectation for the day and we divide it by 30 days or whatever it is, right? It is a really effective guide, I have to say. Here, I'll show you. I don't think it's divided by 30. I'd have to look. I mean, it is definitely an overly simplistic heuristic. Yeah, Goldman got slammed on Friday. The rest of the market did well, but Goldman got dumped. Hardcore. All right, so if you come in here and you look at a daily move, right? Something like 80% of days. Like when we did some historical work on this, and so here's like 1 standard deviation and here's 2 standard deviations. So like the expectation is that we'll move, if we're going to have like an average up day, they're going to go up to this line and stop. Right? And if we get above these like 2, like we go 2 days, you know, sorry, beyond the second deviation, that's like a big move, right? So when you go pre-2020, like that all made sense and was fine. And then when we post-2020 world, these situations where like we bust that, you know, like here. I mean, good grief, look at it. Over here is insane, right? The 19th of that down day that we had, you know? So, since 2020, those ones that exceed are like way more common. So the heuristic that we're using, and it is admittedly a very flawed heuristic, but it's just the most simple thing that you can do, right? It's actually a factor of 16. What if the IV priced in on 2 weeks options is half that? No, but it's 16. 16 was just what we used that from our statistical research was like the most accurate. Right? Where is it? I'd have to, so let me close that. And let me see if I can find back in our Discord here. Oh my gosh, it was so long ago. So to pull it out is a while. Oh, where did it go? Yep, it's square root of 252. Yep. So people had like different suggestions on what that number should be, and so I actually did it statistically, and 16 worked better. But you're right, it's because it's the square root of 252, which is basically number of trading days in the year. Oh, here it is. So then we did a scatter plot of like our estimate versus what actually happened, essentially. And you can kind of see that they kind of have a tenuous relationship, right? like there are some lines that you can kind of draw, but essentially there are enough situations where you think volatility is going to be low and it ends up being really high. That happens often enough that it's not wise to completely rely upon that. In other words, to come in and just blindly sell options is probably not the best thing, right? I bet you though that the point that I was making is that if we were to run this again and include the last 2 years worth of data, you'd see even more dots all over out here. Like things have just become way more zany in volatility world. When we first started doing this, it was basically like the volatility was a really reliable measure, and then like the whole world changed right as soon as we'd figured that out. What if the 30-day VIX futures are higher than the VIX and the 30-day spliced options IV is less than that? I don't know. It was just a really, really rough estimate, right? That is okay. So the futures are higher than the VIX, and the options IV is less than that. Could that have something to do with the roll? I would think that must have to have something to do with the differences between when the options expiration is and when the futures roll is. Maybe. Happens a lot. No. But the whole intention of it, the way that we were using it, and I found that it worked really quite well, was like they'd come in and say, okay, like we just had a non-farms report that was really good, right? So how far will the S&P 500 move? Well, I think that it will go to that, beyond that second standard deviation, essentially, right? And so I got much better targets in the S&P 500 than I was getting before that, because what would happen to me so often is it would take this teeny tiny little profit, and then it was like if you just not touched it the whole day, you would have been like, you know, you would have made so much on it, right? So when we started taking into account past volatility, that was really effective. So this goes back to yeah, you can volatility is something that you should be watching and should be including into your strategy. But you're also correct, Akshay, that you know, a good model for volatility could be a lot more complicated and sophisticated than that. I would have liked to have taken that one a little bit deeper, but the reality was that most retail traders weren't getting the data to do more sophisticated things, you know? So delayed data based purely on the VIX was the best that we could do through TradingView, and we had to just leave it at that. Now what I want to do is I want to use the price history, daily price history of the SPOOs, and use that path dependency paper to create an estimate. I think that would probably be just as good as that opening VIX measurement. VIX is literally more susceptible to 30-day Eurodollar rates than movements in the SPOO. He uses risk-free rate twice to calculate and is susceptible. Okay. Anyways, we're just using a measurement to say this is how much they're expecting movement in the next 2 weeks. I know that it's rough, but it's not useless. I wouldn't say it's useless. It was very, very effective. But I would say that, like, if I'm just using the opening price of the VIX I'm probably only capturing like 30 to 40% of what there is to capture, right? No, I think that Akshay is trying to be really useful, and it might just come off to other people as like he's being a douche when it's not. Right? Like I was trying to say earlier, Nasdaq killers, that we will perceive slights or like people trying to undermine us in the hierarchy or whatever when that's not what's intended. That's our tendency as humans is to think that that's happening. So I think that the best way to deal with this problem is to just always assume that people are doing the best. That's at least going to come off more likable. Brings me back to the same question I asked you the other day. What will the VIX be if the S&P drops 1.5% every day for the next 60 days straight? Well, so what would our... So I don't know how it corresponds to a percentage drop, though. Because my numbers are kind of more in points, right? But it's implying that I guess if we say the S&P is 4,000 and we're doing 1.5% times 0.15, that's 60. Yeah, so yeah, no, I understand, but that's my indicators, and well, I guess it is kind of giving a percentage, but we're saying more points. So I think that my thing implies that it would be 60, but I don't think that that's correct, right? But anything over 50 is high. Clearly, though, I think one of the things that's happened a lot recently is that you look at the VIX and you kind of realize that some of the notions that we have about, or not, let's not say notions, some of the shorthand that we rely upon for volatility clearly were a little bit too rough, because we've had these situations where like volatility went up when nobody would have expected it to, and so forth. Will it be in the single digits? So well, that is another thing, though, is that I kind of feel that using one of these Garcha models would probably, for us as retail traders trying to make a prediction for if the S&P 500 moves today, how far up will it actually move for us to take profits. I think that this model based on Garcher, like path dependency, was more effective than that, so we could use that one. Would probably be a better measure than the VIX itself would be, right? Because there's so much else captured by VIX. It's a really complicated thing to understand for something that we're trying to do something really simple, right? You say it's dog shit. So path dependency. Well, so like, remember I was saying I think that my model, just going off of the opening price of the VIX, it seems to account for 40%, right? Like I'm saying, what I'm saying is this little cluster of orders down in here where things go the way that we think they're supposed to go is maybe like 40% of them, right? If we were to use the path dependency model, that one supposedly catches about 60%. So even the best model that they have on that sort of a thing only captures 60%. But can you show me something that would predict the volatility better than that? Because supposedly they haven't found one yet. Which is kind of the thing. I think if you're going to be trading options, is that they say it doesn't really make sense for a retail trader to buy options. It's a losing proposition because most options expire worthless. And I'm saying if you know that stock is going to go up, then you should totally do it, because the amount of times that it happens is actually way higher than what the market makers would like, at least. No, I'm talking about this situation where the price movement, where the volatility ends up being higher than what the measures of volatility would predict, so that your option could be profitable. I'm saying that if you are an informed trader, that you should be able to find situations like that 40% or more of the time. No one is informed. You can be, though. You can be. You can have information that would be an effective predictor of future order flows that's not priced in by the options. You can. It's hard. You have to be selective. The spread could take care of that. But listen, I can give you a great example, okay? In January and February of 2021, the options, after oil had come down a little bit and were kind of like looking a little dismal and stuff, right? The implied price by the options was like ridiculous. What the options were pricing in was like, there was no way that oil wasn't going to do more than that. And it was like that for a long time, and I took the options and I made money on that one. The same thing happened with MSTR. You can recall that one. And somebody was like, nah, don't short MSTR, he's a genius. And I'm like, no, I want to short the fuck out of that thing. And because I think that when this falls down, it's going to be like insane. And you're going to make tons and tons of money. I had a trade on there that if it had worked out, it would have been like 50K. And I missed it by a month. Like if I just bought a month further out, I wouldn't have made 50K, but I still would have made a bundle, right? But I just missed it by a month. Right? Yeah, can there be situations where you know something that's not priced in by the... Yeah, you can. Even after the spreads. But you have to actually like actively know something. You can't just be like, I've got a feeling, or you have to have like a piece of information and a pretty good idea of why the market's not pricing that flow in yet, right? Yeah, it would have been a 50K winner. Can you believe that? and I missed it by a month. I was so pissed. I never really talked about it on the stream, but I was so mad because I was 100% right on it, and but the problem with the options is you got to get the timing right. Yeah, I wouldn't have been famous. So I'd need to go back and look at how much it actually would have made, because I don't think if I had gone and done the month after that it would have actually made 50K, right? Like 50K was like, okay, if the MSTR goes to the price that I want it to go to within this time frame, then this is how much it's going to be worth, right? But I think that it would have been a profitable position, but it probably wouldn't have been 50K, because that turn did take a while. But it was one that was going to be like 100 to 1 winner, right? It was like a $500 option that could have been worth like $5,000 to $50,000. But it was a YOLO. It was a YOLO, you know? The oil one was not a YOLO. That one was one that I was like, I'm 100% confident in this. Did that one. Any of the other options trade I took last year was one on the tech where there were recovering, and it looked really, really good for a bit, and then all in one day it just fell apart. But again, the point is, you can know things. So my point was really rather the assertion that you should never buy options. I don't agree with that. If you really know something, then it makes sense. Well, it looks like the 30 years kind of turned more bullish than the others on the other side of this. So flattening again, huh? The largest one that you closed out early. So here's the one that always pisses me off, is that my best winners are usually the ones that I also get out too early on. So I can remember in particular this one, like it was like May of 2018, I think it was. And I took a trade with one ZN contract and made $500 so quickly. And I was like, whoa, okay, I'm just going to get out. Like, it scared me. And if I had just left that on, it would have been like a $2,000 trade. So like, I didn't even catch a fourth of what that trade was actually worth, and that was like one of the biggest winners I had ever made. Would you say you are too risk averse? No. So like the issue, Andre B, is that markets are fat-tailed, right? So from all of your experience, you're gonna look at it and you're gonna say, yeah, a move of this much wouldn't make sense. It's gonna go to here. So like the thing is that everybody does this. Everybody underestimates how far it's going to go on those really big moves. And so I've often found myself on the right side of it, but not holding it long enough. And so then I'll get into this period where it's like, I do think that it's going to go this yay far, and it doesn't, and it completely reverses. I don't make anything, right? But that's when you have to come back to this different approach of things, which is like, okay, volatility matters. Volatility is something that like a large portion of the market is looking at, and that you should be looking at as well. Okay. But when you're getting a move, really what we should be doing is we should be saying, how many orders are going to get involved in the market here? right? Based on the news that we just had, what is the net change in cumulative delta, and take our profits based on net change in cumulative delta based on expected orders rather than our measures of volatility, because those situations are exactly where our relationships with volatility break down, right? So once I started to take my profits based on net change in cumulative delta, I had a lot less problems with that, right? You don't hear me complaining about that as much. Usually what you'll hear me say now is like, well, I do think that it can go further, but I'm seeing something that behooves me to get out. And then I'm kind of like, yeah, but I was right. It's because I know that there could be more orders going on out there, but I don't want to sit in it, right? Let's see here. So Ash K's largest was the bet on the taper tantrum. What I realized on it ended up being about 30% of what have been had. I just carried it 3 more. Oh, that's so bad. The one that kills me with options. So with options, what'll often happen to me is I'll get the move. So another one, there was one other options. So now I've pretty much just in this conversation told you about every real option trade that I've taken, right? The one that kills me the most was silver. So I was seeing all of this GameStop stuff, and I was starting to see the retail traders starting to talk about silver, and so I knew that the next day that the silver was going to go up. And there was people like going around the weekend like getting up all of the physical silver, so like that was a talk. So I took an option on that, and I had a huge profit on it like the next day. A huge profit. I think it was like $10,000 or something like that. Like it was a lot, right? And I said, oh, this is just even getting started. It's not even getting started. And then what happened? They came in, and for some reason it was like this narrative against the silver trade just like materialized out of nowhere. It was like really surprised me, and so I guess ultimately I was wrong. I think part of it was, you know, that there is kind of like this industry-wide short on silver and gold to some extent. But also it was that the GameStop people basically turned into, you can only ever buy GameStop and you have to put all of your money into GameStop to create the mother of all shorts, and anything that's not that is just a trick by Citadel to try and make money or something, you know, kind of turned into that. So that's why the trade didn't work out. But so if I had just seen that and been like, well, geez, I just made a couple $1,000s in one day, I should take the profits. If I had just done that, yeah, the number of situations where I should have just taken the profit quickly probably outnumber the situations where I got out too early and missed out. But the amount of money that I would have made on those times where I missed out was probably worth more. Because fantails, right? So it's kind of funny, but it's just kind of the essentially when you get down into it. I took more trades and options than I should have, right? Because my results on the options are much more in line. I guess they're net profitable, but they're more in line with what you'd expect just from random chance. Right? So I didn't actually have enough, you know. But this was early on. It's been a long time since I come across the information that I thought I should really, you know, like basically I said, oh, I need to be like my threshold needs to be way higher. And I just haven't come across a piece of information that really has me like, oh yeah. And like one of the issues I've also seen is that those situations where I do have that kind of information, it's really, really hard to judge the time frame on it. So especially right now, I think it makes a lot more sense to play from long side. Like I do think that Microsoft could be a good buy. I don't know like what the right price is, but I think that Microsoft is probably going to outperform. But if I tried to play it on options, I probably would not get the right time frame. On a tick chart, why does the candles change when disconnected and reconnected to Ninja? Do you have tick replay on? Yeah, there's always risk in some form or other. Otherwise, the payout would just be the risk-free rate. Yeah. It just does with options. See, with futures, all I have to do is get the direction right. Yeah. To say either it's going to go up or down in the time that I'm going to be in the trade. So like if I want to be in 30 minutes, then over the next 30 minutes, it's going to go up, right? Futures, or sorry, options, you have to be right about a bunch of different things, right? You have to be right about the price that you're catching it at, and the direction, and the time frame in which it's going to move, right? And so in options, yeah, you can kind of like, you can do things with options to get your payout so that like you make money whether it moves either direction, or you know, you hedge yourself certain ways so that yes, your profits are capped, but your potential losses are capped too, and it's a really good risk reward. Yes, you can do all of that, but the thing that you're catching in exchange is the whole expiration time is kind of like the huge disadvantage to options that makes it so hard. If you buy it deep in the money, but yeah, but why bother buying it deep in the money at that point? Like, so like if I'm gonna buy deep in the money, why wouldn't I just like, well, I guess you probably get some amount of leverage, but I feel like where options are worthwhile is because you can come in and, you know, take a trade that has like $100 max risk on some YOLO, and if you end up being right, you can make tens of thousands of dollars. You know, if I go deep in the money, you don't get as much gamma and delta, right? So your potential risk reward isn't as good, even though your probability of winning is better. You don't get gamma, but you have delta for days? Really? The more in the money options have higher delta? I thought that the further out that they were, that the more... I thought that you get the out of the money ones were the ones that started to have high delta, like delta over 1. Although I guess when you're taking an option like that and you make money, it's really more because the volatility increased rather than it was the delta. But like that silver play that I made, right? The reason that it would have been such a big winner if I had taken the profit the next day was because there was like a dramatic increase in the volatility of that instrument in one day, and then it immediately came back down. Okay, so what tick replay does is it's time for me to go. I don't know if it applies on a tick chart or whatever, but it basically it like replays all of the orders. In the money increases, delta increases. Okay, but we have to continue this another day because I must have been. I guess what I was saying was more like the more out of the money it is, the more you can potentially make, right? Like if you're looking for more leverage, wouldn't you go more out of the money? But you're saying that this not comes from the delta. But I read some books on it, but those books didn't really go into too much detail about like they would explain what delta and gamma, and I feel like I understand what those are really well, but they did not explain how those factors will react to different things, right? It's kind of assumed that you would have to just figure that out on your own. All right, I gotta go. I will see you guys next week. In the meantime, stay